Okay, so our first segment is going to be around the current U.S. housing market and the timeline for buying a home. Like, okay, I want to buy a house. What's involved and how long does it take? What's the starting point, the middle, the finish point? So the two folks who are going to be helping us here are Janet Yonkman. She's a loan officer at UNFCU. She has more than 30 years of mortgage lending experience. And before joining UNFCU, she spent 17 years as a private mortgage banker at Wells Fargo. She has extensive industry knowledge, and it helps make the process as streamlined and stress-free as possible. You'll hear that as a theme throughout the presentation. We're trying to eliminate the stress around it and again, make it easy for you to finish this process out and get to your goal. If you're looking as a first time buyer, which I think many folks are on this call, or you're a seasoned buyer with a lot of different properties in a portfolio, she can help with that, always in the context of meeting your financial goals. The other presenter on this piece is Lisa James from Corcoran Group. Lisa is a seasoned real estate expert. She's award-winning co-leader of the Morris team at Corcoran. She has over 30 years of experience in the New York real estate market, and her team has built a strong reputation for client service, doing many buyers through the home buying process. She focuses on townhomes, condos, co-ops, as well as single family as well. She previously partnered with UNFCU to educate buyers on our smart real estate financing strategies, and she can provide insightful guidance, which guidance is really important for navigating market changes. She worked with UNFCU members to buy real estate across many years, and she's earned the recognition of being at the top of Corcoran's prestigious multi-million-dollar club and has been featured in the New York Times and luxury listings. She's a graduate of Zicklin School for Business and Baruch College in New York City. So with that, Janet, Lisa, take it away.
Thank you, Mike. Hi, everyone. I'm Janet Yonkman, and welcome and thank you for attending our home buying seminar. I would like to, just one second. Lisa and I are going to talk to you about an overview of the process and the timing that you should expect for buying your first home. Next slide. So there are three types of home ownership: a primary residence, a second home, or an investment property. I will say I get asked this question quite often from first-time home buyers who might be, let's say, buying an investment property, and they want to know why this can't be their primary residence. When it comes to mortgages, occupancy has to do with what the use of the property is. Primary does not mean your first mortgage that you've ever taken out. A primary residence is where that you are going to live for the majority of the time, where you can live and commute to your work. You might want to consider buying a second home. That would be a weekend home, say on the beach. We're living in a remote world. Some people don't necessarily live very close to where their office is, but may have to go into their office several days a week. So they'll buy a second home so that they can stay overnight if they have to go in, say, from Tuesday to Thursday for work. Or you might want to buy a house strictly for an investment purpose. This would be a property that you rent out and you do not occupy. Next slide. So the types of properties that exist are co-ops, condos, and 1 to 4 unit properties. So a co-op is an apartment, usually in New York City, and there are some down in the DC area also. Your ownership interest, you're given a stock and proprietary lease as ownership interest in the property, as opposed to when you buy a condo or a house, you're given a deed as your ownership interest in the property. With a co-op, you have a proprietary lease that allows you to occupy your particular unit in the cooperative. With a condo, you own your unit, you pay individual taxes on your unit, and you are provided with a deed as ownership interest, as you are with a 1 to 4 unit property. Once you exceed 4 units, it becomes a commercial loan if it's 5 units or above. So the ownership structures, You can own a property as an individual or in a revocable trust or an LLC. Owning a property as an individual is just as it sounds. The title is going to be held in your personal name. If you buy in a revocable trust or an LLC, this is a legal form of ownership. The documentation of the trust or the LLC is drawn up by an attorney. The title is held in the trust or the LLC, but the owners of those entities are the people who guarantee the mortgage. So you are, as a person, still tied to the mortgage. By far, most people buy as an individual. Most people who buy in trusts or LLCs are doing that for liability purposes or possibly estate planning. So I'm going to turn this over to Lisa, and she's going to talk to you about the local real estate market.
Thank you, Janet, and good morning, UNFCU. It is great to be here with everyone again. Well, now that we've covered the different types of home ownership, properties, and ownership structures, the next important question is, what does the market actually look like when you're ready to buy? It's interesting because the key thing to understand is that real estate in the United States is highly localized. We often hear about national housing trends in the news, whether the market is hot, cold, slowing down, or becoming more affordable. But those headlines don't always tell the full story. And that's because inventory levels, pricing, and competition can vary widely depending on where you are, not just by state, but by city, region, and even the neighborhood. For example, one area might have plenty of homes available, giving buyers more options and more negotiating power. But just a few miles away, you could see a completely different situation. Limited inventory, multiple offers, and homes selling quickly. In other words, a market that favors buyers in one area may be highly competitive in another, even within the same region. The key takeaway is that buyers should evaluate both national and local trends before purchasing a home or even deciding to buy. And if you have any questions about the local real estate market, as always, I encourage you to reach out. Once you understand your market, the next step is making sure that you're actually financially prepared. So with that, I'm going to turn it back over to Janet, who's going to walk us through financial preparation. Thank you.
Thanks, Lisa. So preparing for buying your first home can never start soon enough. And for everybody, that whole process is going to be your own journey of how long it possibly takes until you actually make that step that now is the time to buy. As you're starting to go through this process, this will help you define what your financial goals are. And you're also going to understand what available assets you have for the transaction, your income in terms of what kind of loan it will support for you. And when I say what kind of loan, I actually mean how much of a loan you can get based on what your income is. Next slide, please. And as you're going through this process, there's going to be numerous people that you're going to want to speak to. You might start by speaking to your trusted family and friends and asking them about their process or how they feel about home ownership. Another person that you can reach out to would be your financial planner, who can help you discuss, your financial planner or your tax advisor. They can discuss with you the assets that you have available for this purchase, and also talk to you about what the tax liabilities are that you receive from owning a property. One of the most important steps is going to be speaking with a loan officer. The loan officer is going to provide you with invaluable information. Just because you hear that interest rates might be 6%, what does 6% mean for you in terms of a monthly payment? What does a $300,000 loan at 6% mean as a monthly payment? Speaking with the loan officer, you'll know how much money you're going to need for the transaction with regards to down payment and what your closing costs are. They're also going to, as I mentioned before, help you know what the mortgage payment is. You can come to me and say, this is how much of a monthly payment I'm comfortable with. What does that mean in terms of a dollar amount? And I can calculate that backwards based on the current mortgage rates. So once you have all of this information in terms of what the monthly payments are, how much money do you need for this transaction, it's going to help you make a decision as to whether or not now is the right time to buy. And hopefully for a lot of you, it will be the right time to buy. Some of you might say, I need to save up more. I'm going to be getting a promotion in 6 months. I need to wait till I earn my higher salary to qualify for what it is that I want to qualify, where I want to live. So going through this whole process, this early planning, is going to get you on the right path for your journey. Next slide. So once you decide now is the time to buy, the first thing that you're going to want to do is get pre-qualified. So a pre-qualification can be a quick conversation with a loan officer. What do I qualify for? The steps that most people go through is getting an official pre-qualification letter from their loan officer. By doing this, you complete a loan application and your credit is pulled. It's run through a system-generated approval process, and it tells you how much you can qualify for. Normally, when you input the details, you're going to state how much of a loan that you want and how much of a purchase price that you're looking to buy. These can be changed as you're looking at different properties, but you do put in a specific purchase price and a specific loan amount. And you can normally get your pre-qualification letter within 24 hours. You can take the next step and get a full underwritten pre-approval. And what this is, it means that you've provided all of your documentation with regards to income and assets after you've completed your loan application. Your file is sent to an underwriter with the specific terms that you applied for, and an underwriter has reviewed it and has determined that yes, you qualify for this dollar amount. One thing to keep in mind with regards to a pre-approval and a pre-qualification, your mortgage payment is going to be comprised of the principal and interest, any carrying costs on the property, whether it be the common charges, maintenance, homeowners association dues, and your homeowner's insurance. So as you're looking at various properties, you do need to keep in mind that what you're pre-qualified for is a dollar amount of those numbers combined together. If you're looking at a condo and the HOA fee is lower, maybe you could qualify for a slightly higher purchase price. If you're looking at a house and suddenly the real estate taxes are higher, you might need to cut back a little bit on what the loan amount is that you qualified for. So everything is a combined figure. And you need to, as you're looking at various properties that you have interest in, keep running them by your loan officer and saying, does this work? What are my payments on this? Does it fall within the numbers that I'm qualified for? And usually getting a pre-approval, I'm sorry, let me just point that out. It takes about a week to 10 days for that to go through the underwriting process. Next, please. Lisa, I'll let you talk about the house hunting journey.
Thanks, Janet. So now that you have your pre-qualification and pre-approval, the next and number one question that I get asked from clients is how long does the process actually take? Now, on average, house hunting takes about 8 to 12 weeks, but the timeline can vary greatly depending on the market and 3 major factors: inventory, competition, and affordability. Number 1, inventory. When there are more homes available, you have more choices. When inventory is low, your search can take longer. As of March 2025, there were 1.36 million homes available. That number is up 3% from February 2025, but still below the historical norms. Number 2, competition. In fast-moving markets, homes can get multiple offers within days. I've worked with clients where we've gone out for a weekend and we've been able to find a house in 48 hours. I've had other clients who sometimes it's taken them a year. If the market has less competition, the pace is going to be slower. As of March 2026, homes are selling fastest in the Northeast and the Midwest, led by cities like Springfield, Massachusetts, Milwaukee, Wisconsin, and Buffalo, New York. Homes in these markets can take an average of 34 days to sell. Homes are selling the slowest in parts of the South, particularly Texas and Florida, where high inventory has lengthened the days on the market. And number three, affordability. It's the word we hear all the time. A buyer's ability to purchase a home is primarily driven by affordability, which we understand is shaped by the interplay of interest rates, home prices, and income. The good news, home price growth is slowing. In 2025, nearly 2/3 of home buyers, which is about 62%, received an average 7.9% discount off of the advertised price. The not so good news, rising cost of living and inflation will limit the cash available for down payment and closing costs. And this is why planning ahead is key. Talking to a UNFCU lender well before your house hunting can uncover and address possible affordability challenges in your desired area. So once you've got a sense of the market and where you want to buy, the next question is, how do you actually make it happen? Janet is going to walk us through the mortgage process.
Thanks, Lisa. So the good news is you're in contract. And this starts once your offer is accepted. Most contracts have a mortgage contingency in there so that you have time to obtain your financing and make sure that your down payment funds are protected. So once you go into contract, if you haven't done a fully underwritten pre-approval, we'll start gathering all of the required documentation for your loan. And once that's in, your file is going to go through processing to make sure that everything is complete. And then it will go to the underwriter for final approval. And an appraisal will be ordered on your property, on your loan. And then you'll go to the final approval. A typical mortgage timeframe is 30 to 45 days. Rate locks are separate from the mortgage approval process. You can choose to lock into an interest rate at any time that you want to, depending on when your closing date is and where you feel interest rates are going to move. Rate lock periods are typically 30 to 60 days. And once you lock in your interest rate, your rate is protected from market fluctuations. Once your whole process has been completed, you've gone through full underwriting, we've received your appraisal, we've received all of your documentation and any conditions that are needed on your file. We'll move your file to closing and we'll prepare a final closing disclosure, and this will outline all of the final fees for you. And Lisa will talk to you about the other side of the closing process before you actually end up at the closing table.
So we have made it. We're at the final stage. We are preparing for closing. Once your offer is accepted, you enter the closing phase. And this can take about 30 to 60 days, with the average in the United States being about 45 days. Even though you're near the finish line, there's still a lot happening behind the scenes. This is when your mortgage is finalized, any remaining conditions or contingencies are being cleared, and all of the paperwork is being completed, like Janet said. If you're paying in cash, the process can move much faster, sometimes closing in as little as 1 to 2 weeks, since there's no lender involved. One key step during this time is the final walkthrough, which usually occurs about 24 to 48 hours before closing. This is usually your last chance to check the home before it's officially yours. You'll want to make sure that the home is in the agreed upon condition according to the contract of sale, and that any repairs have been completed, and that everything included in the contract is still there. It's also a good time to test things like the appliances, the lights, plumbing, and HVAC, just to make sure that everything is working properly. Now, if something isn't right, like a repair wasn't done, or there's new damage, don't panic. You still have options. You can request repairs, you can negotiate a credit, or by my standards, worst case scenario, you can delay the closing until the issues are resolved. But typically what will happen is that money will be held aside in the event that there are things that aren't done according to the contract. Next slide, please. We have made it. It is closing day. So everything becomes official. You're going to meet with your attorney, you're going to meet with me, you're going to meet with your closing agent, and you're going to settle any unresolved items at the closing table. You're going to review and sign your documents, and you're going to submit any final payments. Once everything is signed and processed and ownership is transferred, guess what? You get the keys. And at this point, it's all about making sure there are no surprises so you can move forward with confidence. And with that, that brings us to the end of the home buying timeline. I'm just going to hand it back over to Mike.